I'm Deborah Borchardt, and this is your midday market update. Well, the markets are really mixed today. We've kind of been flopping back and forth between positive and negative territory. Right now, the Dow is down, but the NASDAQ is up. S&P 500, well, it's also down. Really what we're going to talk about, though, is what the market's expectations are today. We have Fed minutes coming out at 2 p.m. Looking for information, probably won't get any. What's also kind of interesting in the market is that oil keeps going up, even though we got news out of China that things are not so strong over there, and I'm joined by Ben Willis. So, Ben, crude oil is up, 15% year to date, keeps moving higher, even though our economy is growing but not gangbusters, and China is now weakening. What's behind this push in the price of oil?
Speculation. And you can think it's a bad thing or it's a good thing, depending on your position in the market. Do they add liquidity to a marketplace? Obviously. But the problem is the money that's been flowing out of commodity funds, if they're looking for a place to stay in commodities, so to speak, it appears to me that it's staying in oil. It's left the precious metals, it's left the metals, nickel, we hear a story about nickel today, copper we've known. Oil appears to be the beneficiary of the money that's staying in. Oil does not trade on pure supply and demand ratios. We have more oil on the top of the earth right now than we've seen in 20 years. That should tell you something about the price of oil, where it is right now, or where it would be if it was trading on supply. There is plenty of supply.
But if you wanted to be in commodities, if you wanted to have that commodity exposure, couldn't you go into something like corn, which obviously has high demand?
High demand. Supported by the government with be creating a secondary fuel with a food source. That's a whole nother political discussion. I can't explain why it's there. My observation of the market is that it's there, and there's an arbitrage now that's been shrinking between Brent and West Texas Intermediate. We have more and more supply coming online as fracking pumps more and more oil. You hear the stories. That's obviously benefited the railroads as a sector. No surprise that Warren Buffett bought himself a railroad. So there's a lot of money in that group, so to speak. I love the master limited partnerships as a play on the oil industry. That doesn't matter what price the oil is, they're going to get, or natural gas, they're going to get paid a fee to pump it regardless of the price. But it doesn't. If you're looking at purely supply and demand, you're going to be on the wrong side of the trade. What you have to need is the supply of money demanding to be in the oil market, and that's what's driving prices.
And the Fed, again, as I mentioned, we expect the minutes out. Do people really think anything's going to come out of these minutes?
I think all you'll look is interpretation by the marketplace to exactly what type of timeline that the tapering is going to occur. Right now, from everything I'm hearing, the traders I chat with throughout the day, is September 18th will be the day that we'll get the indication that the Fed is doing something in the mortgage-backed and the U.S. Treasury market, or maybe one or the other. The minutes, we're looking for some sort of indication whether that line is true or maybe a little bit more delayed. But other than that, I don't think we can expect much more.
All right, well, there you have it. Of course, oil doing very well, strong again. And then, of course, we have the Fed minutes at 2 p.m. That's Ben Willis from Albert Fried, and I'm Deborah Borchardt with The Street.